Next one we're going to look at is the Australian dollar against the yen, and a slightly different picture here in that again a very steep fall, but then largely from October, where the actual low was made, so long before the low in some of the other markets, we pretty much went sideways and then finally broke out really of a triangle formation as opposed to a saucer. Interesting here that we closed above the trend line, but it proved to be a false break before we had a key day here, and the reason for that, if I just zoom in and then make it a candlestick, what happens is we have the close above it, which proves to be a false move, but here is the day where we come down. Once again we hit that limit of range for the trading day and reverse very strongly in a similar fashion to what the pound against the yen did. We've now closed back above that line once more, but this time we accelerate higher again. Interesting today already, if this is a breakout and price has closed above 3 up, then we have hit 1 down and reversed already, so that provided an opportunity down here earlier on today. Now, because the pattern is different to the other markets, then we actually have to have slightly different distributions, and what I've done there is I have a distribution that looks at that previous downtrend, and then I've taken the distribution of that large piece of sideways. And if we look at the chart when the low was made, what happened is the market consistently failed around the control point and also the ledge of time just the other side of control, and so for some time the market didn't have enough upward momentum, even though it looked as though it had made a bottom. And if I scroll across, control starts to hold, and while we don't accelerate higher, by the time we reach the 9th, 10th of March, then control moves towards the top of the trend, and this is telling us that it's accepting value at a higher point, and so this is becoming increasingly bullish. Until finally by the 16th, price is not even touching control, and we finally begin the acceleration upwards. If we now look back at the previous downtrend and also the sideways trend, we get an idea of what price has done so far. In fact, what it's done is really top out towards the highs of that sideways move so far. And then if we look at the previous trend, this coincided with a very mini distribution point. The key thing really is the fact that if we manage to start trading into the mid 74s, 75s, then what we have is a huge vacuum point that extends all the way up to around 80, 88. Finally, we're going to look at the Kiwi against the yen, and here we had the biggest collapse of all, from 80, pretty much almost halved in value, and came all the way back to the, I think probably what were the all-time lows dating back to 2000. If we look at the daily chart now, the pattern again is slightly different. It's not really a saucer bottom, and price so far has not managed to make a new 55-day high. However, the recent uptrend has been very strong. It's important to see the scale here. And this strength really shows itself up when we look at the current distribution from the lows. We broke up a considerable time ago, and we are definitely building a higher distribution. And if we look at the previous trend, control was towards the bottom of that trend at 52. We're already way above this. And so far, price has topped out in the area between one distribution high and the other distribution low. We have to start holding above 56.75 to say that we can open up all of this area here. So in conclusion, just to go through the fundamental reasons once more and then the technical reasons, it appears that safe haven status is no longer valid. A lot of people are long the yen. The correlation between credit spreads has broken down, but there is a long-term correlation between the current account surplus deficit and the yen itself. We've had technical breakouts, and there is little resistance across many of those cross rates. You also have the benefit of a positive interest rate skew in most cases. And as we come to the Japanese year end, so far there is no evidence of repatriation, but if there is, there should be some opportunities based on some very strong profile based supports and also range deviation pivot levels on either the daily, half day or quarter day basis. From a technical perspective, we had different types of traditional bottom patterns appear. The previous distributions in many cases are very, very bottom heavy. We have seen some breakouts on traditional methods, and others are very close to it. What's happening based on those breakouts earlier on in the week, and in the Kiwis case a few weeks ago, is that all of them are attempting to build a new higher distribution, and within that the Kiwi and the Canada probably look the strongest.